Realty Income Stock Analysis. Realty Income is a REIT, which is short for Realty Income Trust. REITs by law have to pay minimum of 90% of their taxable income as dividends, and as their name suggests, they invest in real estate. In case of Realty Income, ticker O, they have been very good at what they do. They have given out over 640 consecutive monthly dividends and increased it 121 times from the time they went public in 1994. Analysis of Realty Income. What I like to do is analyze the company by three factors: fundamental, the history, and the future estimates. After these, I do a simple discounted cash flow analysis to determine the intrinsic value of the company. If any of these factors are bad, it can ruin the investment for me, even if the DCF says buy.
The fundamentals. Realty owns over 13,000 properties, and most of them are triple net leases, in which the tenant takes care of the property, tax, insurance, maintenance, etc. This style of contract, of course, lowers the revenues a bit, but makes the income much more stable. Average lease term is almost 10 years. Portfolio of its tenants, locations, and the industry are well diversified. Their biggest client being Dollar General at 3.8%, industry being convenience stores, 11%, locations, UK 10%, Texas 10%, and California 5%. In simple terms, their business is buying real estate and renting it out. On average, this type of business is really stable because you just collect monthly rent. This model is also quite safe. In Realty's case, they choose profitable, large, and companies with a good balance sheet as tenants, which is proven by their 98% average occupancy rate. In case of bankruptcies, properties can be sold or remodeled to serve new purposes. But of course, this is not good for business. Realty is also a good hedge against inflation because contracts have rent escalations in them. On the other hand, I don't expect to see high growth from Realty Income. One factor is their large size, and the second is their business model, which doesn't leave too much money to invest after dividends. What REITs usually do is issue new shares for cash. Issuing shares has become a bit costly because rising interest rates lower REIT stock prices. Third way for REITs to make money is debt, but there's a limit how much can and should REIT be in debt. Based on these fundamentals, I love the stable business model with stable and safe dividends, but I'm a bit worried about the growth of the company. History. History doesn't guarantee the future, but it gives out some estimates of it. Realty has one of the best records I've ever seen. Consistent, low volatility, but still growing. Of course, it can always be better. They have managed to produce 14% compounded yearly returns since their IPO in 1994 and 4% dividend growth per year. On longer time frames, it has beaten the S&P 500 returns with less volatility. Here we can see the past revenue and on a per share basis as well. Here's the same charts for FFO and FFO per share. To see revenue and FFO go up that systematically is just amazing. Based on history, I don't see any negative in Realty Income because they have been beating the S&P 500. Future estimates. It's always hard to estimate the future, but Realty has invested billions again this year, so I expect at least some growth. Based on history, I would speculate an estimate same as the dividend growth rate of 4.4%. Based on what analysts expect, it will be around 4% as well for the next 5 years. After that, I speculate growth being stable 3.5% for the rest of time. With this information, we can do a DCF calculation. FFO being 4.12 and growth being 4.2. And after 5 years, the growth would stay at 3.5%. And for the price target of 55, this would give us an estimated return of 11%. As Warren Buffett said, number one rule of investing is don't lose money. With this investment, I'm quite certain that in 10 years' time, I won't lose my money. But I'm not expecting any miracles either. Usually my target return is about 12%, which Realty falls below, but only a little. I still rate this stock as a buy only because of the stability of the business and now lower stock price. Plus, there's always a little chance that they could grow a bit faster than expected. If you're looking for more returns and risk, maybe Realty Income isn't for you. But for me, it's a good, reliable core position with nice monthly dividends. This concludes the analysis. If you liked the video, hit the sub and thumbs up. And if there's anything wrong with my analysis, please comment below. As this is my first video, so I really want to hear your input as well. Thank you, don't lose money, and safe travels. Bye-bye.